You know, Mike, at the peak of the last gold bull market in 1980, silver and gold prices soared to record levels, and recently gold rocketed beyond that peak to the four-digit. Silver climbed even higher on a percentage basis, but still remains far from that record level. And you talked about silver, what an incredible opportunity they're providing for us by manipulating these markets. And unlike gold, which tends to be hoarded, silver, of course, is widely consumed. And this creates another, I think, unique case for purchasing silver at these very, very discounted prices. You know, Mike, when I talked to a lot of professionals in the field, most of them were excited to buy silver at $15, $14, but were shocked at $12.5. You know, $10, $11 area, almost cheaper than they're pulling it out of the ground.
Well, it is. There's only a few primary silver producers that have been able to show a profit with silver up in the $17 range. Nobody showed a profit when it was back below $10, and here we are at $10, but the cost of oil is still far high. I mean, even when oil was $10 a barrel, silver producers were losing money back in 2000 when silver was $4 an ounce. Most of the cost in mining is related to energy, and so as oil increases in price, the floor or the safety net for silver rises. Right now, I believe that you're pretty much back below this. The price is below the cost of mining, and you just cannot have a commodity that. See, modern life cannot exist without silver. If all the gold in the world, life wouldn't change. If you got rid of all the silver, we would be back in the Stone Age right away. You can't have a commodity that the world absolutely has to have that is running out, that is below mining costs. It's just not possible for that situation to continue. And they're losing control of it, and pretty soon we will have $50 silver. But one of the things you got to look at is silver was $50 back in 1980. There are 7.5 times more dollars in existence than there were in 1980. So if you take $50 times 7.5, you get $375 an ounce for silver to have the same relative value against the dollar that it had back in 1980. One of the things my book is about is how gold and silver periodically revalue themselves throughout history, something that's been going on for 2,400 years since the first great inflation in Athens in 407 BC. What happens is a society has so much real money, gold and silver, and then they start to replace that, the powers that be, the government starts to replace that money with currency, representations of gold and silver. They either do that by debasing the coinage with a lesser metal, such as copper, something that's very inexpensive, or they start printing paper representations of gold and silver, promises to deliver gold and silver, but they print more than they actually have of gold and silver to deliver against these promises. And as they continue inflating the currency supply, suddenly prices start to rise to account for the inflated number of units of currency that are in circulation. And as prices rise, the public starts to become aware of this, and our natural instinct is to go back toward gold and silver. And when the public finally wakes up and this happens, the will of the public and the free markets reprice gold and silver to account for all of the currency that has been created since the last time it did an accounting. Well, the last time was 9 years in the 70s when gold rose 24 times its price and silver rose, I believe, 39 times its price. Before that, it did so in gold revalued itself in 1934 when it was allowed to float upwards. The dollar was allowed to float down against gold for a few months, and then they froze it at $35 an ounce. And what you'll find is that at $35 an ounce, the amount of gold in the Treasury's vaults, the value of all that gold equaled the value of all of the paper dollars ever printed. Now, the same thing happened in 1980, but it not only accounted for cash in circulation, but it accounted for all outstanding revolving credit. One of the things I argue in the book is that, credit cards have been replacing cash, and most people don't know it, but when you sign a credit card bill, you're creating currency. That the bank doesn't loan you anything. They create a book entry. you just expanded the currency supply of the planet when you take out a home mortgage or when you sign a credit card receipt. And outstanding revolving credit is unpaid credit card balances. When you sign a credit card receipt, the merchant that you're buying something from or that restaurant that you just had dinner at, that goes into their checking account, and that dollar that you just created circulates just like a paper dollar would. It's being paid to other businesses and such until somebody saves it up and pays down credit card debt. So it actually is replacing our M0 money supply, the base money. And what you see in 1980 is that it not only covered all of the base money, the paper dollars that were ever printed, but and that was almost a year that we could have gone back on the gold standard and stood behind every paper dollar. But it also accounted for all of the outstanding revolving credit, which was about double the value of the base money. So today that requires a price north of $7,000 an ounce for history to repeat, and for gold to do the same thing that it did back in 1980, back in 1934, and various places around the planet, just like Weimar, Germany, Hungary in 1946, Yugoslavia in 1998.
Zimbabwe in 2008.
Exactly. Gold always wins. It always will. Gold tells the truth. It exposes the fraud of fractional reserve central banking and this unlimited supply of just whipping up money out of nothing.